Hello, everyone, and welcome back to week 2 of my portfolio update. We are currently sitting at $2,453.75. Now, if you saw my first episode, you might see maybe a couple holdings that were not here before. You might even see a couple holdings that are missing right now, and that's because I've structured my portfolio differently because I did not like what I had before. I think a lot of the stocks that I had were just way overvalued, and on top of that, a lot of them were not as good as I thought. For example, SESAI, that battery company for vehicles. That was more speculative, and I think kind of what I want to go or do with this portfolio is I do not want to have any speculation. I want to have stocks that are long term. I want very strong stocks that make money every year, and basically stocks that I think are going to outperform the index. So I've restructured a bit here. I still have Canadian Pacific at $392 or $398.19. It's about 16% of my portfolio. I think I had a MasterCard. I think I did increase my position. I now own about $839. It's about 34% of my portfolio. But here's a new one that I know I didn't have because I bought this one today. I have Schwab's U.S. Large Cap Growth ETF. Current value at $614, about 25% of my portfolio. I have Visa, which I don't think I had last time, but I do now. It's about $350, about 14.3% of my portfolio. I have Vici, which I don't think I had this one either, but this makes about $250. About 10% of my portfolio. So pretty much my strategy with this portfolio is to have Schwab's U.S. Large Cap Growth ETF to make up about 50% of this portfolio. Right now it makes up about 25%, so about half of what I actually want. And I want the other 50% to be individual stocks that I think are going to outperform the market. So I pretty much want Schwab's ETF to be the base. I want it to be the core. I want it that anytime I don't have, or I don't think there's a good deal in the market for me to get into a certain stock, I want to put into Schwab's Large Cap Growth. I want that to be my base. So basically I want that to be my cookie, and I want my stocks to be the chocolate chips. You know, I want this to be a chocolate chip cookie with Schwab being the cookie and my individual stocks being the chocolate chips, even though it's a 50-50 split. So, but that's pretty much what I want to do. That's how I want to structure my portfolio. So as you can see, I don't have many gains since a lot of these are new positions. I think overall, though, I am up like 9% on this portfolio, and I even have the dividend view here now, which we're sitting at $28 a year, so probably just a little bit above $2 a month. but another thing that I want to talk about is pretty much what my plan is with this portfolio, how I'm planning to grow my wealth. So this is pretty much going to be what my strategy is for deploying money into this account. So let's say you have a job. When you have a job, you make money. You have an income. Usually, there's about 3 things you can do with that money. Number 1, most common thing that people do with that money is they spend the money. So they buy stuff, they live over their means, they're buying cars. You know, they're stuff they don't need. They're going out to eat. They're buying expensive stuff, tattoos, whatever it is, bikes. The second thing you can do is save it. You can stick it into a savings account which I think even in today's rates, I know Capital One's is about 4.25 APY, which is not bad. I don't think that's horrible. It's not great, but it's not bad. And the third thing you can do with that money is invest it. And this is what I want to focus on. Whoops. That is pretty much what I want to focus on. So, my strategy is, from my job, I make an income. For my income, I'm going to invest that money. That money, in return, is going to make me more money and compound on top of that. That will eventually start what people call the snowball effect. This little graph right here is exactly what my plan is to deploy. From my job, I get an income. Every time I make money, I'm going to deploy a certain percentage of that. I'm going to invest that. That money will then make me more money and compound on top of that. When it compounds, that money eventually grows and grows and grows. It collects little snowflakes, basically. And it does something called the snowball effect. And then, that's when it gets really nice, because that money keeps growing every year. Every single year, it grows and grows and grows. And the more time you have for it to grow, the bigger that amount is going to be. And, that's a real simple way of putting it. My strategy is to keep it simple. That's pretty much what I want to do. I do not want to keep it complicated. All I'm going to do is buy stocks that I think are long-term holds and are pretty much monopolies in their sector. So, example like Visa, MasterCard, Vici. I'm not too sure about Canadian Pacific, but I think that's still a good one. And with those, I'm going to keep adding into those positions. I'm going to add more positions, and then I'm even going to add more money into my core positions, which is the Schwab US Large Cap Growth ETF. Eventually, I'm going to add more money to where that ends up being 50% of the portfolio, and pretty soon I'm going to start deploying even more money into this account for it to grow. I did deploy about, I think, $250 last time, but with some of the positions I closed, I did lose a little bit of money. I'm not too worried about that, because I think a lot of those stocks that I did have, like SESAI and Fastenal, I got rid of those. I'm not interested. I really want money they're just revenue machines. I want companies that are revenue machines and grow their revenue every year and grow their free cash flow every year, so that can come back to me, the investor. So this is pretty much, where my account sits currently. I think pretty soon, maybe in about a month or less, I'm going to start aggressively deploying even more money into this account. So as the updates keep coming, you'll see this account growing more and more and more. And, I can't wait for that, and I think it's going to be awesome. I think this account's going to grow to be very big. And I'm really curious to see what my performance is a year from now. I have a watch list, and out of that watch list, MasterCard and Visa just came up on my radar, and I thought they were at a pretty good valuation right now, to where I deployed some money. I'm going to try not to be cash heavy all the time, so anytime I don't think there's a good deal on anything, I'm going to deploy into Schwab's large cap growth. But anytime I do have a good deal, I might just sell a little bit of Schwab's to then deploy that money into what I think is if a certain stock is having a dip and I see a good deal, I'm going to buy into that. I'm going to try to stay invested about 95%. I don't want to hold cash. I don't want to hold a lot of cash in this account. And that's pretty much my strategy for what I want to do. So if you like this video, give it a like. It really helps me. It helps get the channel going and the views going. And Also, thank you for 300 views for my very first video. I did not expect it to do that. And, yep, thanks for watching, guys.